Hi, this is Clinton Donnelly from Donnelly Tax Law. Let's talk about Form 720 excise tax. Most people have never heard of this form. Most people don't know what an excise tax is. For Americans abroad, the reason this form is of interest is that there is a excise tax on foreign insurance policies that you have signed. An excise tax is basically a sales tax at the federal level. The tax is 1% on policies that involve risks to living, like life insurance policies, sickness, accidents, health insurance policies, annuity contracts. It is a 4% tax on the premiums for all other foreign insurance policies, casualty and indemnification policies. This tax is paid on Form 720. This is a totally separate form. It does not go in with your 1040. It is mailed to a different location. The most irksome thing about this form is that it requires an EIN. You cannot use your Social Security number. The IRS requires an EIN. I recommend the first time you mail this in, you do not include a payment. You do not put down your Social Security number. The IRS, seeing the absence of an EIN, will create an EIN and bill your account for the amount due, and they will send you a letter. When you get that letter, you call up the IRS, pay the bill, and from then forward, you can always use the EIN number now and send your payment in at the same time. The best way to put your handle around why this tax exists is to realize that the U.S. uses the tax code to protect the U.S. financial industry and to keep it strong. The three legs of the financial industry stool are banks, brokerage firms, and insurance companies. These are the three arms of the financial industry, and they're all protected by the tax laws. The banks are protected by FATCA, the Bank Secrecy Act. The brokerage houses likewise are protected by FATCA and the Bank Secrecy Act, as well as a 30% withholding tax on dividends to foreigners. And the insurance industry is protected by this excise tax. Now, a lot of people would say, hey, how on earth would the IRS ever know I had a foreign insurance policy? Well, you have to voluntarily report it, but if you don't volunteer it, they may never know. It has been said that audits of people renouncing their citizenship have involved significant queries into outstanding foreign insurance policies. So this is a point of interest. If you look to renounce, you might want to make sure you're clean here. I do expect, as FATCA gets rolled out more and more fully, that foreign insurance policies will start to have a reporting obligation, and it will become visible to the IRS. However, as you can tell, this is a very small tax. Typical person with a health insurance policy, maybe a car policy, so let's say a health insurance policy of $3,000, 1% tax on the premium, that's $30. A car insurance policy, say $1,000, 4% tax, that's $40. That's a $70 a year tax. We're not talking big money. If you are, in the eyes of the IRS, have decided to intentionally fail to pay this, in other words, it's fraud, the penalty is an additional, it's a double that tax. So it'd be an additional 70% on top of interests for not paying. So it's not a terribly large exposure unless you're a person overseas who is engaged in a business which has a lot of insurance payments. I have a client who owns cars and rents cars to people as a car rental business. He has a lot of casualty insurance liability that he has a 4% excise tax obligation to the U.S. on that. If you're in any sort of business overseas where you have a lot of tax, you as the owner of that business would have a liability to it. That's the excise tax, and I hope that helps. Hope you have a great day. Bye-bye.